Oh, Lordy, 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 it's Friday again. Happy Friday. It's Financially
Happy
Fluent Friday.
Friday.
How you doing, Sarah?
Good. How are you, Zach?
Doing amazing, doing amazing. We have the wonderful, amazing Sarah Haliburton, the beer home team here with us. She is out doing her thing again. We had to push back a little bit. She's working with clients, which is exactly what we'd like our realtor to be doing. So thank you for joining me today. Was that?
So we were walking some fixers today.
Ooh, that's always a fun opportunity.
Absolutely, absolutely. I would definitely say opportunity is the word.
Gotcha, definitely. Well, let's jump in. I know last week we were talking a little bit about some down payment assistance programs last week, and then we had some technical difficulties, so we kind of wanted to pick that topic up. And so I'll start off kind of just talking about some of the basics, and maybe we could discuss from the actual buying a home side of things. So on the loan side, there's a ton of down payment assistance programs out there, right? There are programs out there that you can do down payment and closing cost assistance. Sometimes you'll get it as it's called a silent second, so you don't ever have to pay on it. There are some grants out there, but most of the time those grants are for lower income. And so honestly, in San Diego, if you're going to qualify for a home, 99.9% of the time the people with the grants, they're not really going to qualify for the home they want anyway. And then there's also some that you could actually get as a repayable loan. So where you'd have it where you actually pay back every month, and it's usually over a 10-year period, depending on the loan program. So there are some advantages. The advantage is obviously you're using other people's money. You keep money in the bank. You don't have to have as much cash out of pocket for the costs and closing and all that. The disadvantages are that you don't control the loan or the rate. The rates are based on the loan program. So realistically, if you have great credit, you're not going to benefit from that credit. It's just going to be based really pretty much dictated by the program. So there are pros and cons, and there are definitely some advantages. And I do a lot of them actually with the right profiles. But I want to kind of get your perspective from the realtor side of things. Are there advantages or disadvantages to having a buyer that's using a down payment assistance loan, especially in a market like this?
So in this market specifically, it's a challenge, right? Because in this market, we're getting beat out over and over again by people with cash. So as a down payment assistance program, you don't look as strong going in. Now, that doesn't mean that we shouldn't use it, because at the end of the day, the most important thing is to get you in a home, and in a home that you can afford, that's comfortable for you. So if down payment assistance is the only way that you can go, and maybe you don't have as much saved for the down payment and closing cash on hand, but you can take the higher rate and you're okay with the monthly payment because you know that you have monthly cash flow, or you know you are already paying a high rent, and so even with the higher rate, the rent and the mortgage is still the same, then it's a good option. However, we're going to have to be a little bit more um, aggressive in the market and a little bit more proactive than reactive. When what I mean by that is we're not going to be able to sit on Redfin and Zillow, wait for a property to come, and then bid against 9 other offers, because we're not going to look as strong from a financial standpoint. But what we can do is go direct to seller and find you different options that may not be listed. So just be ready for a longer period of time to find your home, and just be ready to kind of overcome some of those challenges, because we won't have the cash on hand that other people may.
Now, that makes a lot of sense. I mean, because that's the number one thing I hear right now is that, that appraisal gap conversation we've had in the past, talking about how much you're willing to cover over. People are coming in, very much over asking. The kind of the strategy I've seen from the listing side is listing low and getting significantly higher, or listing lower than what we think it's going to go for. So that does definitely make sense. I think that, again, if you have the right strategy, they're great loans, but you just have to kind of look at the whole picture, which is why I wanted your 10 cents on it, because it's not just the loan. It comes down to, are you going to get the offer accepted, or how do you strategize that? So that makes a lot of sense. Well,
Yeah, I mean, I think it's a great opportunity if you can qualify. And again, just be prepared to, go through a little bit more of a process, but it doesn't mean it's impossible.
right. No, perfect. Now, actually, I wanted to shift gears and talk about something that you have some recent experience with, and congratulations on that land purchase you had going for your client there. That's a big deal. Congrats. So I get asked this a lot. Obviously, it is a hot market. Again, we know that. We know it's competitive. And I get a lot of people asking about what's the process for buying and building? Can they buy a piece of land and just build on it? And I could talk a little bit to the loan process, but I think that a great place to start would be from your recent experience and kind of share with us what you're seeing from that side, both from the the realtor perspective and also what does it look for the build and that sort of thing. So give us some experience there. Give us some insight there, please.
So I feel like a lot of the people that are asking about land feel like it's cheaper or more affordable to buy the land and then build something to put on it, right? Well, the challenge with that becomes number one, land is expensive too. So the land that's, $200,000 in Valley Center, number one, you're going to have to grade it. And so that becomes a huge cost because depending on how flat the land is, you can't just build on top of it. So grading becomes a very expensive process. On top of that, you have to find out where the utilities are. How close are the utilities? Is the land somewhere where a fire truck can go in and turn around? Is there a fire hydrant nearby? Where is the electrical? What type of septic system or city sewer is it? And how far is it to connect? So once you start adding all of those costs, not even the cost of the house, that's just to get the land ready. Then you got to go into the permitting department with the city. Okay, well, how long does that take? Well, right now, after the COVID backlog, we're talking months. That my what I was quoted was 9 months just to have them look at it. That's
Yeah.
not even to get it back. That's just have them look at it. And then after that, you've got architect building plans. To get a grading plan and permit alone is about 2 months. So you have to be ready to sit through the time, incur the cost of putting utilities on it. And then once you do find a piece of land that's, let's say, has the utilities nearby, once you build the house and all of the construction costs and the time on the money that you've been paying while this building has been going on, you might as well buy something that's 800, 900,000 because that's what you're going to be into it for anyways.
Yeah.
Um, the advantage comes with buying or building your custom home, right?
Right. Right. The
And
dream.
And Zach, what's funny is a lot of people think, well, I'll just go buy a modular home and just plop it down on a foundation on the land. Well, unfortunately, not every piece of land allows for modular homes. So that becomes the other challenge is finding the ones that do.
No, it makes sense. And there's the financing aspect of it as well, is that it's not just one loan. You're typically doing the land loan, and sometimes you can do a bridge construction loan, but usually you're doing those two separately. Then you got to finance again and get into the out of those two loans because those are typically short-term loans. So they're not as easy to do. Not everybody does them, but there are quite a few lenders out there that will. Those rates are going to typically even be higher from my experience than what you're paying on just a regular conventional FHA mortgage as well. So the lending side is a little more complicated. You said something that I've seen recently with both family and also one of my good friends is a contractor, and it's 6 to 9 months minimum, and just to get it started, and then you have the build process and all of that. So it's not an immediate answer. And one thing that take into account is that with materials moving how they have, we've had the supply chain issues. We all know that. There's not a guarantee they can't guarantee the cost. The builder can't say it's going to be exactly this much because when it comes time to actually break ground and start putting that concrete in and putting building up, framing up the house, the materials could have changed as well again. And, it could go both ways. But recently, as we've seen, nothing really seems to go in the downward direction as far as costs are concerned.
Well, and even the time, time is money. And so right now I've got a kitchen reno project for a client. We've been wanting to list their home, but they can't get the cabinets in because they're back ordered. And, sinks and faucets and just the crazy things that go into building a home. And the other thing, Zach, while you touched on it, they do have higher rates, but you also have to put more down.
Yeah.
The minimum, I think, on a land construction loan is 10 to 25%. And the 10% is extremely difficult to qualify for. And it's got a much higher rate than one where you're doing 25% down. The other caveat to that is just like the real estate market, you got to find a listing agent that's willing to accept a land and construction loan because a lot of the people buying land are coming in all cash because they have the cash to build and the cash for all this. So it's a challenge all the way around. But if that's, the route that you want to go, we definitely have experience in that. But just be prepared for time.
Yeah, I actually have a family member of mine that actually sold a house and they were able to buy the land outright. But then now they're just waiting on the construction. And actually, he does construction, so that's where he's going to have the opportunity, is he can go in and cut a ton of the cost because it's stuff that he does and he's very familiar with. But that's so not typical. I mean, most people, I'm okay with a hammer, but you don't want to have me build your house, and that's kind of the situation.
Well, and you got to realize that you're dealing with people that are doing multiple jobs too, right? I
Right.
asked when we were in escrow on that piece of land, Zach, I had reached out to a couple contractors, and that was 3 weeks ago. I
Right.
finally got a call back from one yesterday, and he's like, "Hey, you had inquired." And I'm like, "Well, yeah, it took you 3 weeks to respond to me. I'm not so sure I want you for the job, like at this point, because what does the time look like? And time costs me money." And so
Yeah.
I think that that's something that people have to understand when they get into the land purchase department over there.
Yeah, makes sense. Well, let's shift gears to another fun topic of conversation right now that I'm hearing a lot of people bring up. And this is such a common misnomer, but it's an important conversation, I think, to discuss. You hear a lot of people talk about the Fed rate. Everybody hears about the Fed raised rates. And so everybody automatically starts talking about the mortgage rates going up and changing. And um, obviously, this is an area that I specialize in, and this is where I live, so I could definitely speak to it. But how many times have you heard that? That's kind of my first question for you: is how often do you hear people say, "Oh, well, the government, the Fed raised rates. The mortgage rates are going up." Pretty
All
common
the
thing, I'm
time.
sure. Yeah,
All the
yeah.
time.
So this is a common mistake, right? So the Fed rate, basically, the easy way to think of it is they call it sometimes the overnight rate. It's the rate that banks lend each other money. Essentially, is the easy way to go into it without getting too technical on it. And that, while it can sometimes impact everything in terms of economically, it can have a kind of an ancillary impact on mortgage rates. There's no direct correlation. As a matter of fact, yesterday rates kind of spiked up because the so take a step back. Let's actually explain something simply. Mortgage rates are based on the mortgage bond market, mortgage-backed securities. Again, I'm not going to get too technical because we're not doing Econ 101, but the bond trades every single day, and there are a lot of factors that impact that bond. And recently, as we started to see inflation, we've started to see some major changes in interest rates, just simply because of the return on the investment for the investors. And that's too technical, so I won't go any further than that. But the reality is that they're two very, very separate things. Now, there is, because they're both economic pieces of the economic picture, they do have some impact, or the Fed raising the rate has some impact, but it's not a direct impact. And a good example of that is the rate spiked a little bit yesterday because people freaked out and they said, "Oh, the government's going to do something." No. But now rates are actually back down today. So you would think that since the Fed announced that they're going to raise the rate 0.25%, that interest rates would continue to rise, but they've actually pulled back a little bit today. And what that is just simply the people who invest in the bonds freaked out a little bit, said, "Oh, okay." The bond market reacted accordingly, but now they kind of calm back down. They've had a chance to digest that and look at that and go, "Okay, well, yeah, we kind of knew this was happening." I think I lost you, Sarah. All right, well, we'll go. I think she'll come back. Hopefully she'll come back on with me. I just lost her here. But long story short is that, the Fed rate and the mortgage rates are not the same piece. Now, you're going to continue to see the Fed rate rise. It's just going to happen. You're going to continue to see, because the government has to counter inflation. They have to make the cost of money more expensive. And I think bring Sarah back on here.
Right.
Hey, if you didn't want to talk to me, you didn't have to jump off the line.
Technical difficulties when we're in the field, but we're just gonna roll with it.
That's all right. So I was just saying that, we're going to continue to see the Fed rate rise, and we may also continue to see mortgage interest rates rise, but they're not going to be directly correlated. The government has to counter inflation, and really one of the only ways they know how to do it is to basically make money more expensive. It's kind of the thing. So I've rambled on about that, but from your side of things, do you have clients asking questions about it, or what? Do you see anything on that side that you hear people talk about?
I mean, everyone always wants to know about rates. Well, in real estate, you have two things, right? And you have a couple different ways of getting deals. Okay, so you have a agent-driven deal, a mortgage-driven deal, which would be like a market-driven deal, right? And then you have just a deal. So an agent-driven deal would be something like that I find off market. You're not in a bidding war. You're not doing crazy things. A mortgage-driven deal is one where rates are low. Like the cost of money is low, which it's been for years. And I mean, still historically we're low. When I bought my house, I mean, rates today, I think what Zach, they were at 4.16 yesterday. Around there was the national average.
Yeah.
When I bought my house, they were at 5%. So
Yeah.
4.75 was a gem of a rate. So they're still low. It's just they're not as low.
Right.
And so I think ultimately people have to decide what kind of deal do they want. And they have to realize that it's not always going to be a deal like a market driven deal, like back in, the crash days where you could pick up a property for 200K with a killer interest rate. Like that's just not going to happen in this market. But you still have deals that are mortgage driven because rates are still historically low. And you still have deals that are agent driven because you do have agents like myself that are out there hustling, bootstrapped to the ground, looking at deals that aren't on market. So I think we circle back to this time and time again, Zach. And I think it's like you don't wait to buy for the perfect time. You buy and wait because historically there's a reason that the big guys on Wall Street are taking their money out of the bond market, taking their money out of crypto, they're taking their money out of stocks, and they're putting it back into the real estate market.
Absolutely. I mean, we've seen rents. I think the number was it was pretty crazy. I think it was like 13% already a rate increase, or interest rates for rent, have jumped up. I mean, that's a pretty massive change. And if you're a family on a budget, having that big of a swing, let's say you needed to get a new place, that's a massive swing to your overall impact, to your monthly budget. And you need to be able to keep that in mind. So, all righty. Well, Sarah, I think there you are. Got you back. See. All right. Well, I think we've covered everything here from my end. Is there anything else that you want to shout out or anything in mind today, Sarah?
Not today, but if you have questions, reach out to us, DM us, hit us up, and we'll be back next Friday for another Financially Fluent Friday.
Boom. Have a great weekend. Thank you.
Thanks. You too. Bye-bye.